September 15th, 2008, that's when Lehman Brothers declared bankruptcy. The markets largely seized up on the public side. The bank markets began to also similarly contract.
I can remember vividly the fourth quarter of 2008 when it really started feeling the nerves that was in the capital markets. And lenders in general, most of them were in a liquidity crisis.
I think businesses, along with the investors, were all obviously anxious, to say the least, given the tone in the markets.
There was no capital available for clients or for new loans. Anyone who needed to renew any facilities were very nervous about that.
Many of them were asking the same questions we were. Is this a temporary issue? Is this a long-term secular trend? If I can't rely on my banks and I can't access the public markets, where am I going to find capital to fund my business? The private placement market, I think, was also cautious, but largely available for those companies that needed capital during that period of time.
We did take about a 2-week kind of hiatus to figure out and reassess where we thought the market stood, and then we are actively providing capital again.
The vast majority, when we spoke to our clients, were very open, talking about what their concerns were, and often the biggest concerns they had was liquidity, and if they were going to have availability of capital if they were to need it.
Sometimes it was companies that we had been talking to for years that found themselves coming back to us because the other traditional avenues of capital that they had relied on had essentially dried up. We found them reaching out to us as much for simply just advice on what was going on as much as they were for capital. I remember one relationship where we were in the process of closing and documentation when the public markets completely shut down. But we had already worked with them before. We were looking to honor our relationship with them, and we found a way to basically diligence the situation and fund during a period of time when essentially most banks were completely closed down.
A client that we had a shorter relationship with, we had just begun our relationship, I believe, in 2005. And this client didn't specifically have an immediate capital need, but because what they saw was going on around them, because of their concern about not having availability from their banks, if that was the case, they wanted to make sure that they had some availability from other sources. So the CFO called me, reached out to me and said, would you be interested in potentially looking at putting a proof shelf in place for us so that I can, sleep better at night? And that's exactly what we did in the first quarter of 2009. And so we went forward and underwrote a $125 million proof shelf facility for this client. And I remember his comments ongoing years after saying, Prudential Capital Group was there for us. I slept better at night knowing that I had that capital available to me. And we really made the bet that, we were going to come out of this in the long run, but you had to take a long-term perspective.
Most private market investors really view providing capital to their companies as a partnership. And so when times of trouble or volatility or the company becomes very challenged, that's really where the investor can show their true colors and really take the approach of we're going to weather the storm together and both come out successful on the other end.
Prudential Capital Group responds during times of market volatility with a very steady hand. We have been at this a long time. We've seen various markets. So when we are seeing volatility in the markets, we are making sure that we're communicating with each other. We are knowing what we can and what we can't do so that when a client calls, we are able to respond to them in a way where they know we can be there for them.
One of the things that Prudential Capital Group's always done is spent a considerable amount of time developing insight, knowledge, and a rapport with management teams and within industries long before there's an actual capital need. It's that knowledge that allows us to make decisions based on insight during periods of time when most people might otherwise be concerned about deploying capital. It's one of the key things that I think allowed us to fund and invest a number of transactions during the fourth quarter of 2008 when essentially the broader bank market and the public market and much of the private market was otherwise unavailable to companies.